Go.
Recording in progress.
All right, guys. Good evening, everybody. This is the 5th October 2025, Crazy Sunday night, general market outlook and crazy system revision. Now, today is a bit different. Today, we just do a little bit on the general market and then we zoom into the crazy system because I feel that our system is getting more and more accurate. I'll show you guys more in detail. And of course, tomorrow I will be on the road, so that's why I may not have time to actually do the regular session. Yeah. So with that, let's start the session right now. So Ben, what do you have for us this evening?
Well, gold has been downright scary for the past 2 weeks or so, because if you look at the RSI from the middle of last month, somewhere from the 18th of September, it has not gone down below 70. And it's on a relentless march upwards, to the extent that I was sharing with Kelsa that it is scary because gold is a barometer, it's a predictor of what is going to happen. Normally, when you see gold marching up like that, you are expecting something like war, civil war, or maybe collapse of government, or society. So any one of these is in the bag. I mean, it's there. There's a potential for each one of these to happen. Yeah. Uh, and I think a lot of us are aware that since the pep talk by the Department of War, in the US by Pete Hegseth, it is a bit unnerving. And some are even predicting that, as Trump himself has said, there's the enemy from within, So people are even half expecting a civil war to arise out of all this. So God knows, who knows what is going to happen. But gold is sort of predicting that something big is on the horizon. Now, normally towards the end of a bull run, you get the mainstream media coming in, and this time, we have Morgan Stanley chief investment officer saying that your investment portfolio should no longer be 60-40, used to be 60 for equity, 40 for bonds, but now they are saying 60-20-20. That means 60 for equity, 20 for bonds, and 20 for gold. This is Morgan Stanley, for goodness sake. And Jeffrey Goodluck, the bond king, is saying that you should have at least 25% of your portfolio in gold. This is absolutely crazy, if you ask me. So the mainstream media is covering gold now. So what will be the outcome? Nobody knows. Has it reached the peak yet? In the short term, maybe. It depends on what is going to happen to the S&P. I still believe, as we have previously discussed, Cal, that when the market tank, we would expect gold and silver to tank together with the market initially, because when there's a margin call, people will sell whatever they have that is of value, to meet their margin call. And if the gold is profitable, gold will be the first to be sold. Now, in the longer term, I still believe that gold has room to run. Why? Because when the mainstream media gets involved, as I just mentioned, the speculators will start to come in. The speculators are the paper hands, But remember that up until recently, the main investors have mainly been central banks, and central banks are the diamond hands. They are not speculators, and they're not deterred by even significant movement in prices, because the main role of a central bank, is to protect their sovereign wealth, and in the short term, even if gold is to fall, I would think that somewhere around the 3,000 would be a floor. This is where the floor that has been set by central bank buying would be. Yeah. So that's my focus of where it could go. Yeah, in the short and in the longer term, it depends on the outcome of the geopolitical situation. Yeah, we all know that the US dollar has been weaponized and it has eroded a lot of faith in the US dollar. Yeah, the US dollar is continued to be devalued. Yeah. In fact, Trump himself has said that he wants to devalue the US dollar, yeah, so that US exports are more competitive, yeah. And on the other hand, de-dollarization by the BRICS country is continuing, yeah. What will ultimately happen is that the US dollar could lose its reserve currency status, yeah. How will we know when the US dollar has lost its reserve currency status? We will know when gold is no longer priced in US dollar. Yeah. Gold will be priced in future in renminbi, RMB, the Chinese currency. That will be the day when we know that the US dollar is no longer the reserve currency of the world. What is the likely outcome when the US dollar is no longer the reserve currency of the world? Yeah. Um, US Treasury bonds, yeah, will not have very much demand, and as a result, yeah, the yield, yeah, or the returns for US Treasury bonds, yeah, will be extremely high, and to the point that I think the Treasury, not the Treasury, I'm sorry, the Federal Reserve itself will come in to buy, yeah, US Treasury bond, just like the Japanese central bank has done, yeah, for the Japanese government bond to try to keep the bond yield low, yeah, to try to keep financing costs low. Now that itself has a major implication on the value of the US dollar. Yeah, the US dollar will be devalued to a very high extreme if that happens. So at the end of the day, I still would think that gold will still have room to run, even if we are to see a short-term crash in the US equity market. Yeah. And likewise, silver, yeah, silver has also been climbing relentlessly, and it has gotten very close to the all-time high, or somewhere around 50 US dollar per ounce. Yeah, that is a very interesting uh, potential resistance, yeah, because over the last 50 years, in fact, yeah, you see silver having topped up twice before, yeah, at around 50 US dollar. What's going to happen there? I don't know, yeah. Maybe Kel later on can comment on the technical aspect of it, yeah. But to me, as long as gold continue to go up, yeah, gold will always lead the way and silver will follow. So we'll just see what happens with gold. Yeah. If gold continue to persist, yeah, yes, silver could breach that $50 resistance, yeah, and end up higher than 50. Where it will go, I have no idea. But the interesting thing about prices having gone up as much in the silver space is that it is starting to attract a lot of speculative money. Yeah, meme stock buyers. Yeah, you will find the GameStop crowd. Yeah, will be starting to come into this space here. Yeah, for silver speculation. So yeah, we can potentially see some big moves, but at the same time, we can there's no guarantee that these big moves could be up or down. Yeah, it could go either way. Now the other interesting thing is that uh, the general Chinese public, yeah, are starting to buy physical silver now, are starting to invest in physical silver. There's an enormous amount of savings in the Chinese public in China, in mainland China, simply because a lot of that money that has previously been going into real estate, yeah, has been sitting on the sideline. Some has gone back into the equity market in China, yeah, but by and large, a lot of it is still on the sideline. So potentially a lot of this can go into speculation. Yeah. So yeah, interesting times. Yeah. Gold is a very long-term play. Yeah. There are years that goes by with hardly anything happening. Yeah. And then there are weeks like this couple of weeks that we are looking at where years actually happen. Yeah. So yeah, let's see where it will go. Yeah, that's my 2 cents worth of it. Yeah, over to you. Thank you.
Okay, thanks, Ben. Thank you very much. Right, thank you. Okay, I don't know how silver will be, but I will stick to my $50 target. Okay, I'm still very, very adamant because $50 was the last target that we saw gold, silver went there. So I suspect that a lot of stop loss will be triggered over around there as well. So this is something that we need to watch out for. Yeah, that's my view on silver. Okay, thank you, Ben. Thank you so much once again on the last minute to come in once to share with us. Okay, so let me just share my screen and we can kick off today's sharing session. Yeah, just give me a minute. Okay, so let's begin. Okay. All right, so we have Ben who just shared with us a very good detail on how he view on the current market. And yes, indeed, I totally agree with him. If there's going to be any stock market pullback, gold will be the first to be sacrificed. Gold will pull back. And then after that, the market will realize that the best thing to buy is gold, and then the gold will come back in again. So that is my view, we shared with Ben at the same time. All right, disclaimer apply as usual. Whatever we share today itself is just for you to as a reference. And of course, hopefully you make some money out of it. Yeah. Okay. So let's look into the some of the conventional stuff that we have for you for this evening. All right, let's go into this. Now, for those people who haven't come in, all right, this is my personal Twitter account, which is the X account. Okay. So this is the first thing I want to share with you. This is a very interesting chart. Let's take a look. Now, this is the Dow Jones chart versus the let me just double check itself. Yeah, the Dow theory, which is the Dow Jones versus the transportation average. Okay. Let me just put my annotate. Annotate my stuff first. Okay, so back in this year 2000, you can see that the one in black. Okay, you can see that. Wait a minute, let's just double check. Yeah. Okay, the one in the one in black is the transportation. The one in blue was the Dow Jones. Now you can see that the transportation was going down, okay? And that gives you a little bit on the front of the Dow Jones. And then after that, the Dow Jones actually traded down quite a fair bit, down by 20% on here, okay? So now what it's trying to say is that the difference between now and the transportation is that we are very far away. Now, previously in last year itself, it was still very closely needed. And when the transportation came down, as you can see, the Dow Jones also came down. But apparently, since September, I mean, in fact, since July, the margin started to open up. So you can see that if you're going to be any form of a divergence here, right, we are actually seeing the same thing right now. So if you're going to see that as a guide, if the transportation is to fall, then the Dow Jones is going to fall. So the magnitude of the fall is between 8% to as much as 10%. So this is what I think this chart is trying to explain. All right, everybody cool with this? If everybody understand this, press number 1 right now in the comment box. Yeah, press number 1. Okay. Now today we will focus a lot on the conventional chart. Yeah, conventional. So it's more like people will understand this better. Okay. The next chart I want to show to you is that now the central bank has been buying a lot of gold. In fact, itself, in the month of August, they bought another 15 tons of gold. Now, that is a 27 monthly purchase over the last 28 months. So the Bank of Kazakhstan, all right, they added 8 tons. Bulgarian, okay, Turkey added another 2 tons. And Bank of China acquired 2 tons, making it the 10th consecutive monthly increase in the gold reserve. So now the China official gold holding has surpassed 2,300 tons. Now, this is still a very far-fetched from the amount that US is holding, but definitely it shows that there are a lot of people now not very comfortable with the US dollar, and that's why they have been buying a lot of gold as a form of a hedge. Okay, so that's another big reason why gold is going higher. Now, one thing to note, this is the Magnificent 7 counter. You can see that this is the round hill management of 7 ETF. And you can see that we do have a bit of double top at the moment. And if you look at the ETF itself, we are also having a baseline. So if the thing is to fall, we're going to see the market pulling back quite significantly because there are a lot of gaps in between. Okay, so watch out for this, yeah. And of course, we know that this is a very important thing. The US banks are now sitting on a total loss of $395 billion of unrealized losses for Q2 2025. Now, why is that so? Because remember, most of the banks purchases the US bonds at a very high price. So now, as the bond price is going down, definitely their losses are getting bigger and bigger and bigger. But in order to stop this, they ensure that the stock market goes up. And that is why now, even though we have a big issue on the investment securities on the bond market, but the market just hardly talk about this, they concentrate on the current stock valuation. Now, this is an interesting chart that given by one of the people since 19th century, 1900. If we do an extension call from here to 1906, 1929 before the stock market crash, and then 2001, 2020, oh my God, we are now exactly at the same high level before the market pulls back. Now, I don't think that the market will be pulling back by 90%. I really don't think so. But coming down by 10 to 15%, I think is very, very possible. Yeah. So I repeat myself once again, I don't think we'll see a crazy magnitude of 90%, but 8% to 10%, I think from where we are right now, it is very, very possible. Okay. So traders, you can take this as a as a reference guide, but make sure that you trade with the OP rule. If the market do break below OP rule, then we can probably see something similar like this will happen for the US market. -8 to -10%. Yeah. Okay, all clear? If all clear, press number 2 right now. Please do participate in the texting so that I know that you guys are not sleeping and you are listening to me. All right, because all of you mostly changed to your non-camera view, so I don't know whether you're listening to me or not. All right, so the office CMBS delinquency rate has went all the way up to new high. That means a lot of people are getting delinquent right now. And even the NASDAQ has a similar chart pattern. Let's take a look, yeah? Now, this NASDAQ chart back in year 2008, whereby you have a very incredible megaphone opening up. And once the market breaks here, the market sold down, recover, then the huge sell-off. So is it going to be the same thing here? Well, let's take a look here. We have this megaphone, okay? And then we have a very interesting first pullback soon. So if the market pull back, that'll be the first thing to watch. And then after that, the market will rebound, which is whereby we are also looking for the rebound. And once it breaks below the trend, which is somewhere around here, that is where the whole thing gets very nasty and dangerous for some people. So guys, take a picture of this right now and see whether or not are we going to near a peak. Now the Dow Jones, the NASDAQ right now is down by 7.5%, 7.5 point on the IG weekend data. For the Dow Jones, it's slightly higher by 23.7%. Yeah. Okay, so pretty cool stuff. Yeah. Now, the LEI is an indicator that I follow. LEI stands for the Leading Economic Index. So you can see that whenever the LEI actually pulls back, you can see it's almost confirmed for sure there will be a technical recession, which happened, right? So this time around, the LEI has already traded down, but the US market is going up. Now, it doesn't make sense because we're talking about in general. So of course, we all know that the reason why the stock market is still rising because there's a lot of money coming in to basically suck people in to buy while they sell. Okay, it's something that I need to be very, very precise on. I'm not going to lie about it. It's not a mince by word, but that is a fact. All right, of course, some people say that by saying all this, will I get in trouble? Well, guys, if I one day disappear, I mean, probably something happened. All right, so this is the largest bubble since 1929. Look at it, the market cap weighing itself is really a big divergence over here. As a matter of fact, the technology stock now hold 56% of the entire S&P 500 market cap. Now think about this, the S&P 500 is worth how much money right now? It's based on 99% of the product that they actually import. So imagine right now when they realize that 55% of the technology stocks is missing, it's very, very clear that this is something to do with the government, and then we can be very careful that things will get very dicey, yeah? Now you can see right now, based on the institutional investors, based on this, you can see that the retailers are the net sellers, while the hedge funds and the institutionals are net sellers, but the retail clients are the net buyers. In very interesting. So the big boys are exiting from the market, and the regular traders are going in, trying to squeeze some puff from the market. Well, I'll tell you that it will work until the fat lady sing. And then when that happens, it's all right. Don't blame, because that is for you to take note, yeah? All right, so this is something very interesting. This is actually the S&P CPCFD, and it's cross-checked with the, this is cross-checked with what? Sorry. Okay, 3 months volume. Oh, okay, sorry, yeah. So you can see that every time when there's things bottom out, eventually the market will pull back, yeah? Okay, so where are we right now? Oh gosh, we are here. So you have it before, when we are here, the market basically went up, then a bit more, then it's to come down, right? So you can look at this itself as a form of a guide. That means very soon we will have a little new little king, and then after that, the people will be there, basically very strong to defend for themselves. Now to come back to the variable point, not too keen, but to come to the point whereby people are comfortable, they don't lose any more money again. I think that will be something that I'm looking forward to do. Yeah. So guys, if you're going to be involved with me, take note of this to happen. Okay. All right. Now, one thing to note: the AI bubble now is 17 times the size of the dot-com frenzy, and 4 times the power of the subprime bubble. So you can see that basically they're telling me that the Vietnam is a very crazy market. All right, a few more charts before we go to the crazy thing. Let's take a look. Now you can see that right now, based on 30th of June, because it's not updated today, the ratio now is at more than 217 for the market value. Is way 9% or even 72% that I really rejected them in a way or so. So why is that so? Because I believe that everybody got the reason to live for themselves, and I think that this, for me, I have a lot of things to do, that no time, and therefore all this thing itself should be shoved away. Yeah. And of course, you can see right now the Buffett indicator is screaming at the most value stock level ever. This is really the highest level. Even Warren Buffett himself, who was born in 1930s, could not see this. Okay, so that is whereby it's going to be very, very scary. Now the moment you can see the 1-year bond and the 3-year bond start to become very erratic, I think that is something that we need to watch out for. Yeah, very, very important. And of course, you can see right now the S&P 500 is really moving alongside the money supply. The M2 is very clear that we need more people to watch out for this. I mean, it's been going on for quite a while already. Okay. Okay, so that will be all the fundamental news for you guys. Now, at the moment now, the Dow Jones futures on the IG is up by 23. The Nasdaq is down by 7.5. But the crazy part is that since 30th until today, it's not updated. But the Schiller P index now is really at a very, very high level of 40.08. So we compare to the past, the next highest and crazy point was back in 1990. Year 2000, 1999, and try for the thing, but didn't do that well. And then now she's concentrating on something different. Yeah. Okay, so guys, that will be the conventional chart. Let's look at our own stuff here. So give me a PowerPoint in. Just give me a moment. One minute. I'll try and get the charts up. Okay, so let's just do some revision on the market before we take our rest for this evening. Now, one thing to note, guys, when you see that where the KSI does a hybrid, whereby green and red is actually formulating on the same bar, that means that the indicator got problem. You need to exit and then uninstall and then come back in again if you have this. Okay, so for those who are seeing this, whereby you see the KSI is linked with the thing. Now, what you need to do is very simple. Just have to change the time frame from this day chart to 5 minutes and 5 minutes back to the day chart. Now, if you do have this problem where the whole KSI having big issue on this app, then you need to uninstall the app and come back in again, your new installation. For those doing desktop version, you just change the time frame. It will work. All right, it will work. Yeah, you don't need to do anything else. Okay. Yeah, a minute, yeah, something clock over here. Okay. One. Okay, so this is the US Dow Jones as of yesterday or Friday. Now the market, once it goes above 146,529 and breaks above pivot one, no matter what you tell me, is bullish. Never fight the pivot. Now, if the market hit pivot one and pull back, that's called resistance. But when the market breaks the pivot one, that means this is a breakout of a very strong resistance, and usually the market will trade higher. Now, at the same time, you can see that the KSI was green and the KCX was black. So with these two combination, it makes the market very, very powerful towards the upside. And if you look at this right now, everyone, this is what happened. The market basically has been hanging around the OP level, and then you have your first introduction. And you can see the market really going higher. You repeated the same set again. And then after that, you got a little bit resistant at the pivot one. Then after that, if you didn't notice this, once the market goes below the level, all right, the diamond line is meant to sell. And of course, again, if you draw again, the market failed to stay up and the market came down. But interestingly, when you see a double diamond, okay, that is nearby each other within 5 trading bars, usually we know that this potential trend might change. It's going to be like this or like this, okay? So usually we don't take chance, we take some profit first, and then we let the rest decide. Now, once the market closes above the level one, very high chance it will go to level two. Now, once you hit level two, you really need someone to be around so that you aim for level three. So once you hit level three, you notice this, the market starts to come down immediately. Very interesting stuff, right? Guys, this is something that you can take note, yeah? Okay, having some issue again. Okay, this is the Dow Jones 5 minute. Let me just change it away. So this is the NASDAQ. The NASDAQ stays below pivot 2 on last Friday. and it was below MLP when it was coming down. So likely that's what happened. Now you can see at the start there were many, four diamonds everywhere. Yeah, so it's because they need to apprehend the leader. So after that, you see a stack diamond, you draw a line. By right, you can go up, but once the market goes down, it's a sell because you can see the KSI is actually red. So the buy is not the best idea for today. Yeah. Then after that, you see multiple diamonds all waiting to be, involved. That is something not correct. As a matter of fact, they should run into space, and then this way the whole game open up. All right, anyway, there was this diamond, and this is a four diamond, and make kudos on this. I do a trend line, and of course, this very cool. He managed to put in through the middle pocket, middle of it itself. Yeah. So, guys, this is what happened for the Nasdaq last Friday. Okay, very crazy stuff. Yeah. Right. 1 minute. Open to my. Sorry, what did you mean over here? Let me just do a translation. Oh, okay. Everybody's very crazy with system. Yeah. Thank you very much, Nin. Okay, so what happened? You can see that after that, the market basically straight to trade below OP, and then you draw your diamond line. So at the start, it goes up, that was good. Then after there's a four diamond, which you draw another line. That's where the market got resisted, and the market had to break down all the way to KTR -2. So imagine that this upside itself, like maybe for an hour or so, has bring you so much issue. So sometimes in life, you just have to accept certain things. Yeah, very interesting phenomenon. All right, okay, so this is Nasdaq. Okay, it's S&P 500. You can see that the high itself went to the high of 67.45, and then it pulled back all the way to 67.12. 67 point 72.2.20. So I never seemed about it. Anyway, so if the market breaks below the pivot 2, then the market very high chance will come down. So of course, KCV will be the first one, and the second one up here. So 66.605 or 66.238. Okay. All right, so you let us know what do we do over here. So yeah. Okay, that's a bit of jam in a moment. Okay, so you can see over here itself, the S&P 500 have a double star, double diamond, and then when you go up itself, it stick perfectly at the KTR +1, then that's S&P 500, something that everybody tricks. Then it started to come down, but it did not go below OP. And I think that was where the diamond appeared, and you draw a line, and that's where we entered. Now, of course, again, this is based on the agreement. Yeah, I don't ask for more, I ask less. But what is very incredible is that this is where the market closed below the diamond line and below the line, and there's no support. Then what can we do? So the only way is that can we consider to take up, say no, you have to do this way, because anytime this will happen, and that's where the captain came in and self-sacrifice and want to hold the chart. Okay, so something very interesting. You take a look on the captain side. All right, so the S&P 500, similar story like the gold, just periodically use it. And then after that, you can see the impact of gold. Now this morning, the gold open, it goes down first, and after that, it stop here, which is like basically not at 0.5, but maybe at -0.7, okay, something around that direction. Then after that, the market rebounded, right? And this time around, it goes up and it's go above OP. That was something that is incredible. The pin, the pin like this. But after that, you can see that the new generation come out and they're very, very aggressive. And they know that it's very difficult to do anything illegal here. So that's why the opening account, I tell you, this is going to be a matter of time, but it's going to be a lot. Yeah. Okay. So that's something that we can actually consider to look out for the month of October. All right. Okay. All clear. All right. So you can look at this right now. You can see that this is the Nasdaq. This is a gold. Gold came down perfectly. Once again, this opening price. It touches the MLP. Ding dong, ding dong, ding dong, and then we have the signal to go, and this way you can sell the market. And incredibly, that is a double stack here. So you want to buy it back, yeah? You can see that? Very important. So after that, you can see the diamonds now really, they really know who's the boss here, even though my size is not the biggest, but in terms of this movement, we are. Okay. Okay, so you can see over here, this is what happened. The market went all the way up across the KTR plus one and then the KTR plus two. And once it's done, it pulls back down to KTR, went this way, go back down to KTR. And then after that, it hit the pivot KTR plus two. It stopped there very nicely. And then after it came back down, double diamond, and it try again, stop here, stop here. All right, but what is important is that usually after the market trade the pivot KTR plus one, the remaining part we normally don't trade until the market cross above the target, I mean the TP level, and start to go higher. Yeah, so something to just take note of that on the side. Yeah. Okay, so this Nikkei and Nikkei, same thing again. You notice this whenever you want to go up, right? There's always be the double bottom, and the KSI and the KCX will change also. Very, very interesting. Okay, so when you go up yourself, you can see it stop here very nicely. Watch here, it's free. All right, you can see the market goes all the way up yourself. Right. Okay, this is the gold chart. It's a silver chart. So silver again, double diamond lifted up above OP and then sort of triple around you. So I think it's a very, very high chance that you should be able to hit uh, this one. Okay, so if that is the case, so we can look forward that how to combine this and this together. All right, and then we will basically have someone to share with you the importance of stuff here. Yeah. Okay, this silver, same thing. Silver was vanished up nicely, and then he watches. And of course, silver. I mean, this you have this Nikkei going up all the way, and you can see that there's a very strong upside. Now, someone asked me, Kel, is my KSI having an issue? Like always, again, I said that look, we buy based on OP. We then look at the pivot to increase or not the other way around. Okay. So thing is this, for now, we can see very clearly that the market now, we do have some selling pressure on the Nikkei. Right now, it's now actually at the all-time high level. So it's very, very interesting phenomenon. Yeah. Okay. All right. So that is for silver on Nikkei. And you can see the Nikkei chart all the way brushing into the KTR plus one. Now, we did say before as well, right, when the market is actually above KTR, above pivot plus one, and it's more than KTR plus three, usually it will sideways for a while and then go for it again. This is what I know, right, from all the experience, yeah. Okay, so that is why I say for tomorrow market, it's going to be very, very interesting. So traders must be tuning in to really trade the market. It's very, very important for everybody here. All right, so that will be all for today's session. I wish you all the best. But before you go, let me just share something very important to all of you before you go. Yeah, just hang on a minute. Okay, so this goal itself is a BNB, right? It's a BNB. And by right itself, once the market trip the high or trip the low, there will be some selling force coming into the market. So for next week, all these are not possible because we only need to wait for the next day data, then we can see the pivot. But definitely with the BNB over here, I kind of realized that the market will be sideways for a bit for time being itself. Hold on a minute. We bring on more market in and we can call off day. Now, some people ask me about crude oil, and I told you guys crude oil was something that I was looking to buy. But then after that, I noticed a 4 diamond was here. I put my line across it. Once it goes below the line, I just cut it. And of course, I told you guys, if people who buy this, they will likely put a stop loss somewhere around here, right? The typical stop loss level. And truth be told, the market came back down, so made some money from there. So. Okay, guys, so you get an idea now how to use a Crazii system and some of the insights of the US market. I will be able to send out the market outlook by probably 8:30. So hopefully you can enjoy this. But market top itself, right? I don't think I have the capacity to do that because of the early hours I'll be away and I may miss out on things. Internet might be slow and stuff like that. Okay, guys, thank you very much for this evening. Thank you for waiting. And I say once again, with Ben, is that please be very careful now. We are really at this irrational exuberance here itself. If the market just buy and just buy and just buy, anytime the buys just reverse and then things will get very ugly. We saw it last week on the gold time. So the similar on down could actually be happening. All right. So we all will wish that on as well. Okay, guys, thank you very much. Good evening. And thank you, Benedict, for coming in. Let's have a good rest day. See you tomorrow, guys, in the morning. Bye-bye.